Volkswagen's CEO and Labour boss clashed during a staff meeting on Wednesday. CEO Oliver Blume told workers management is not operating in a fantasy world. He argued they're making decisions in a rapidly changing environment with new competition entering the market with unprecedented force. Sources said his speech was interrupted repeatedly by booing from workers. The gathering of around 20,000 employees at VW's main plant in Wolfsburg was also attended by German Labour Minister Hubertus Heil. The two sides will meet for a fourth round of talks on December 9th. VW management has pushed for major cuts and insists plant closures and pay cuts are needed in Germany to respond to Chinese competition. But workers have warned of more strikes if plant closures remain part of wage negotiations at the German automaker. They staged a first round of walkouts earlier this week. It comes with Europe's car sector facing trouble. It struggled with a weakening market on the continent and a slower than expected take-up of electric vehicles. Blume said the price pressure is immense at Wednesday's meeting. He added VW had to work its way back up sales rankings in China and that labour costs in Germany were too high to compete. Blume is quoted as saying VW therefore urgently needs to take measures to secure the future of the company. Daniela Cavallo, who leads VW's Labour Council, said all sides, including management and shareholders, had to make sacrifices. She said unions were committed to trying to get a deal done before Christmas. Sources said Labour Minister Heil urged all sides to find a solution that excludes plant closures or forced layoffs.
All three of Wall Street's main indexes notched record closing highs on Wednesday, thanks to upbeat results from Salesforce and comments from Federal Reserve Chair Jerome Powell. The Dow added about 0.7%, the S&P 500 rose 0.6%, and the Nasdaq climbed 1.3%. Speaking at a New York Times event, Powell said the economy looked strong and that inflation was continuing to moderate. Investors expect a third consecutive interest rate cut at the central bank's policy meeting later this month. In earnings news, tech took center stage as Salesforce jumped 11% to hit an all-time high a day after beating analyst estimates for third-quarter revenue. Other cloud companies also advanced. And Marvell Technology rallied 23% and also hit a record high after the chipmaker forecast fourth-quarter revenue above analyst estimates. Liz Miller, president of Summit Place Financial Advisors, said Marvell may be emerging as a player in the AI space.
With Marvell, it's still a little bit of waiting to be seen, but there were some good announcements in the earnings report and an expectation of their participation in the AI market and how they might have product that's very desirable there. Investors certainly looking for the next NVIDIA or any other chip product company that may be playing in a similar space.
Speaking of which, NVIDIA gained 3.5%, leading gains among the mega-cap growth stocks. Earlier on Wednesday, a report showed that private payrolls rose modestly in November. Investors now await weekly jobless claims data on Thursday and the monthly non-farm payrolls report on Friday. General Motors told investors on Wednesday it would take a more than $5 billion hit on its joint venture in China, sending its shares lower in morning trading. GM's China division, once a profit engine, is now losing money. The non-cash charges include $2.6 to $2.9 billion for restructuring costs and $2.7 billion for reduced joint venture value. GM has struggled to compete with car makers in China, the world's largest auto market, as they are partly buoyed by government subsidies. GM partners with SAIC Motors in China to build Buick, Chevrolet, and Cadillac vehicles. CEO Mary Barra has been transforming GM's China operations and told investors in October that by the end of the year, there would be, quote, a significant reduction in dealer inventory and modest improvements in sales and market share. The automaker lost about $350 million in the region in the first 3 quarters of this year. Stiff competition and a price war in China have had visible effects on other automakers as well. Volkswagen, while now the best-selling brand in China, is trying to deepen ties with Chinese partners, including SAIC, for EV technology to offset flagging sales. The German automaker said SAIC agreed to extend their joint venture to 2040. And GM rival Ford is transforming its presence in China to become a vehicle export hub, though some analysts have urged all of Detroit's automakers to cut their losses and exit China altogether.
Shell and Norway's Equinor will merge their British offshore oil and gas assets into an equal joint venture. They announced the deal on Thursday. Based in Aberdeen, Scotland, the venture's expected to produce over 140,000 barrels of oil equivalent per day. The new entity will become the British North Sea's biggest independent producer. But Shell told reporters that there's no intention to conduct an initial public offering. The ageing British North Sea basin, where production started in the 1970s, has seen a steady exit of oil companies in recent decades as production declined. The British government's decision to impose a windfall tax on North Sea producers, following a surge in energy costs in 2022, has further put pressure on producers to reduce investment and exit the basin. Equinor is currently developing the Rosebank oil field, one of the last known major oil reservoirs in Britain, while Shell is developing the Jackdaw gas field. A range of exploration licenses are also thought to be part of the transaction. The companies expect completion of the deal by the end of next year.
Britain approved a multi-billion-dollar mobile merger on Thursday. Vodafone and Hutchison's 3 UK were given permission to create the country's biggest mobile operator. Regulators had warned the deal could push up prices, but they accepted a pledge by the two companies to invest in 5G networks and offer protections for retail and wholesale customers. Britain's Competition and Markets Authority, or CMA, said they now believe the merger is likely to boost competition in the UK mobile sector. It added Vodafone-Three must agree to implement the proposed measures. The approval follows a demand by Prime Minister Keir Starmer for regulators to put economic growth at the front of their thinking. It also marks a major shift in the CMA's belief that 4 operators were needed to ensure competition and keep consumer bills low. Vodafone-Three have committed to spend $14 billion to build a better 5G network serving 50 million customers. Regulators believe the investment should drive competition between the 3 remaining networks. They also think it could eventually deliver a better service for customers. Vodafone will own 51% of the combined company, and it will have an option to buy the remainder after 3 years subject to certain conditions. Vodafone shares were up slightly in early trading.
Bitcoin has finally hit $100,000. The landmark was reached amid expectations of a friendlier US regulatory approach to cryptocurrencies under US President-elect Donald Trump. Investors are betting that his administration will unleash a boom era for the asset class. It caps a year in which the cryptocurrency's price has more than doubled. Bitcoin was also up about 45% in the 2 weeks since Trump was voted the next US president. A slew of pro-crypto lawmakers were also elected to Congress.
Hello, Bitcoiners. Thank you very much. Hello, it's good to be with you.
Trump embraced digital assets during his campaign.
If crypto is going to define the future, I want...
That included promising to make the United States the crypto capital of the planet. He's also promised to accumulate a national stockpile of Bitcoin. Trump has said he'll set up a crypto advisory council, and he and his sons also announced a new crypto business, World Liberty Financial, in September. Under President Joe Biden, the Securities and Exchange Commission and the Treasury have cracked down on crypto companies for allegedly violating securities and anti-money laundering laws. Bank regulators discourage lenders from dabbling in crypto, and Congress failed to pass legislation that would help promote mainstream adoption. Under Trump, a softer regulatory stance is expected, and crypto executives say the industry is now pushing for a range of measures. That includes potential executive orders on access to banking services, as well as crypto-friendly picks in a range of roles, including a new SEC chair.
Apple appears to be facing trouble with AI in China. Tech publication The Information says it's struggling to adapt Baidu's artificial intelligence models for its phones. The report says there are problems with the model's understanding of prompts and its accuracy in responding to common scenarios. Elsewhere in the world, Apple uses tech from ChatGPT maker OpenAI. But AI systems from US firms are unavailable in China, leaving the market to local companies. Neither firm commented on the report. But if confirmed, it would be bad news for Apple in a very tough market. Recent figures showed its phone sales slipping 0.3% in China in the third quarter, while local rival Huawei posted a 42% surge. And AI is a key battleground. Apple's launch of its latest iPhone 16 in September drew scorn in China for lacking the new technology. The information says the tech giant's privacy policies also block collection of data from iPhone users who make AI-related queries, data that Baidu wants to save and analyze. The report says the Chinese firm's latest model, Ernie 4.0, is the basis for the iPhone services. Airbus is cutting just over 2,000 jobs in its defence and space division. That's about 5% of headcount in the unit. More than half the cuts will come in its space systems business, which has been making heavy losses on satellites. The company brought forward a statement confirming the news after reports by Reuters that cuts were planned. However, the restructuring is less fierce than expected. Back in October, the aerospace giant had said 2,500 jobs could go. Now it says the new plan will involve no compulsory redundancies. The cuts will be spread across the firm's 4 host nations, France, Germany, Spain and the UK. Airbus says the relevant governments have been briefed on the plan, which is part of a restructuring dubbed Proton. The space business has been a growing problem for European firms, which have specialised in large, complex satellites. They've been caught out by the move to smaller, cheaper orbiters, like those used by Elon Musk's Starlink space internet business. France's Thales is also in talks with unions over cuts to its space unit. Earlier this week, Reuters reported that it would join forces with Airbus and Italy's Leonardo to build a European rival to Starlink.